You can figure it out. So
Right? Oh God.
I'm really slow with it. I'm really slow with it. My kids they just breeze along, and I struggle.
I don't know, I struggle too myself sometimes, but it looks like we are now live. Hello, good morning. Welcome to those of you joining us just a few minutes early. Mark and I were just having a giggle here in the chat over two-factor authentication being a popular thing now. We are ready to get started with the first session of the day on time in just a couple of minutes here at 11:55 a.m. That's Eastern time. Thanks all so much for joining us, and I hope that you're having a wonderful day so far. Hello, everyone, and welcome to the session. I am pleased to introduce Mark Leibovit, known as one of the leading technical and cyclical analysts in the world. He's also the creator of his trademarked volume reversal TM indicator and annual forecast model found at vrtrader.com. In addition, Mark is also the editor and publisher for LeibovitVRnewsletters.com. Now, he's got a lot of great information to share with us today. So, without further ado, Mark, I will hand the mic on over to you.
Thank you, Charlotte. Welcome, everyone. And I appreciate your time here. And we're going to go over a lot of interesting topics this morning. I cover both my technical and cyclical forecasts here. And over the years, I've been doing this, just a few years. We actually launched back in July 1979. So it's about only about 45 years that I've been doing this, but I guess I'm addicted to the markets and enjoy markets as many of you, I'm sure, do as well. So what you're looking at here is our homepage at Leibovit VR newsletters, shortcut URL vrtrader.com, and we publish a number of letters. One of the most interesting letters now for many of our newer subscribers is at the bottom of the screen in the middle is the blockchain letter with what's going on in crypto. So we're going to touch on that obviously this morning. There's a lot of interest in metals and resource, so we're going to show the forecast there as well. But these are all available at vrtrader.com, and there is a promo code you can see at the top, half off. If you enter that when you go to the website, you get 50% off of any of these letters, and we're offering that here courtesy of the Money Show people. Well, I was back in 2019, Timer of the Year. I've been that a couple of times under Timer Digest. Long career, as you probably know. Those of you who remember me from before the turn of the century, I launched it at the business as the volume reversal survey back then, using my technical tool, the volume reversal, as the keynote in the name. And we're still very much volume based in our analysis, but I've become as much a cyclical analyst as a volume analyst over the years. For those of you interested in my technical work, McGraw-Hill had published my Creator's Book of Volume. It's several hundred pages covering all the major volume indicators, including my volume reversal indicator. It's available on Amazon. It's also available, as you can see, in Chinese as well. So It's been a really a very exciting book for me, but also it's been well received. I've been working for a number of years on a sequel to it, Trading Your Way to Profits using the volume reversal indicator. Not done yet, but we'll obviously keep you posted. There's a lot of tools and tricks to my technical analysis. And by the way, the volume reversal indicator is not something you can pick up anywhere, as those of others may try to have copied it. The only platform that actually shows the VR indicator that I've authorized is Metastock. So we can talk about that at some point. But and meanwhile, there's other tools and stuff that are related to it we'll get to in this next book. For those of you who want to follow me weekly, I'm at housestreet.com. It's a broadcast podcast out of Vancouver, British Columbia. I've been doing it for a number of years, cover all the markets there, just general commentary, including cyclical analysis and current news, housestreet.com. Um, One of my great teachers and friends who passed away a few years ago, and I'm sure many of you know the name Yale Hirsch, was a big inspiration to me. Um, back in 1987, this is less than 10 years that I'd been in business. He had dedicated his very famous Stock Traders Almanac to me and three other technical analysts, calling us the new prognosticators. Um, so Yale's Stock Traders Almanac is, leading indicator. His son now continues to publish that, Jeff. But Yale was a good friend of mine, and it was a great inspiration to me that he had dedicated his very famous book back then to me and mentioning me in an introduction, considering I was new in the business. But you may know Yale primarily because of the January barometer. So goes January, so goes the year. And there's subtleties to that, which we're not going to get into, but for the most part, it has been, pretty accurate. So I've already covered that point. So, but the thing I'm going to talk about today, which is not really being covered in the financial press, that to my knowledge, to any great degree, is Sel Rosh Hashanah by Yom Kippur. And yes, I'm Jewish, but that has nothing to do with the analysis. It's basically the holiday is based on the Hebrew lunar solar calendar, and there has been studies basically showing that markets do change direction around this time frame. And I think it's really funny because we put out a sell signal last week saying, "Watch out, sell Rosh Hashanah by Yom Kippur." And sure enough, on Monday, Jerome Powell comes out with a statement saying that markets may be overpriced here, and markets reverse to the downside, as you know, here Monday, Tuesday, and down again today a little bit. Most stocks have been underperforming, frankly, except for big names like Apple and Nvidia, for example. But most of the market was looking a little toppy. But in any event, the sell Rosh Hashanah Yom Kippur. And Yom Kippur, by the way, comes in October 2nd. So if cycles play out, you're in a bit of a corrective period. And then, we also know September, October have been notable for corrections in the market. So I'm big into the geocosmic. For those who followed me over the years, I'm watching solar flares and everything else. And people say, what the heck does this have to do with the stock market? Well, it has a great deal to do with the stock market because everything is not necessarily what Jay Powell has to say or what Jim Cramer has to say on CNBC. There are powers outside of our control, such as solar flares, which can affect our satellite system and all our communications and have in recent months, including Starlink satellites. And there was an event back in the mid 19th century called the Carrington event, supersized sunspot facing the Earth, causing a super flare, which fried the Western Union lines back then. And we're track these all the time. And if that occurs, we could be really knocked out of business here on planet Earth. So just tracking these things is important. And this is a little description of the Carrington event that occurred back in September 1859. But we track the CMEs, which are the coronal mass ejections, and we post those in our newsletter. I'm also into cycles, as this is also part and parcel to the study. Way back 1972, I think it was. This is 7 years before I even started. My old friend Louis Rukeyser, that I used to be, you may not know, remember this, but I used to be an elf on his television program. broadcast out of Baltimore, Maryland, way back. And he had a guest on the show, um, Ian McVitie, who had produced a newsletter called Deliberations. And he had a presentation on national television about how full moons and gold have correlation. And though he was not invited back on the show, it got me interested in looking at lunar cycles to see if that had any correlation to gold or the stock market. And sure enough, over time, that has been the case on a short-term basis. And I follow these very carefully. You can see there was a new moon on September 21st. And right near this little market peak, we got the full moon coming up on October 6th. So we watch the markets around that time as well. But you also, above on the chart, you're looking at the various equinoxes and solstices. And as you know, we're sitting right on top of the autumnal equinox right now. Over the years, I found the change of directions in the markets around the equinoxes and short term around the lunar cycles. Probably the most dramatic one in recent years was on March 21st, 2020, when during the COVID collapse, the stock market literally bottomed right on the day of the vernal equinox before it exploded to the upside. So we don't get as many of those dramatic events every day, but you can see that the autumnal equinox now is overlapping this current little possible trading top in the markets, and just something that we pay a lot of attention to. So you don't listen to this on CNBC or Wall Street Journal, and they think it's hocus pocus, but it's not at all. And these forces and powers are affecting us and have been tracked by knowledgeable people for thousands of years. I'm not the only one who does this. This is going back a few years with permission. I gave credit here to McClellan, who published back in 2020. He's a notable analyst, as you know himself. And he put out a study regarding gold and the full moons to see if there was any correlation. So I'm not the only one looking at this. Anyone who's in the futures or commodity markets are very sympathetic to the cycles that are out there, besides the moon itself and the short term and near term effects of these seasons. So, and this is sort of a clip from spaceweather.com, September 22nd. There was a storm on the sun. There were two large sunspots, and the theory behind this, and I've learned this over the years, is when the sunspots face the Earth, that's when we can get problems here in terms of huge solar flares or disruptions. So, there is something occurring on the sun right now. So, you could say, well, the market's down because Jay Powell said something. Well, maybe it's also because of the powers outside of our planet that also affect the human beings. When you think about it, we're 90% water, and the moon affects our tides. If you think we're impervious to that, then I think you're a bit short-sighted. So, as you know, the Fed cut interest rates, which is the big story. But Powell came out with this story last couple of days on the markets. Went uh, went a little berserk here. You know, the story about interest rates is that the Fed does a lot of crazy things, and we also know the Treasury bond market. I don't want to lecture you, probably hear this on TV all the time, but basically there are a lot of aspects to it. Following interest rates and what the Treasury bond is doing is literally more important than what the Fed funds rate and what the Fed is doing, though you could argue also that the tail wags the dog. But the Freedom of Information Act came out a few years ago, and with a story regarding how the Fed had invested in Harley Davidson in terms of providing a short-term loan to a private company. And this is not discussed in the financial media. And, there's a lot of shenanigans at the Fed. I've been a big proponent of abolishing the Federal Reserve, and I'm not the only one who's been talking about that. And I think there's a lot of look into what's going on. But, the main thing you should be looking at is what the M2 money supply is doing. Basically it's been increasing, and despite the fact the Fed may have been tight on interest rates or not loosening as much as everybody had talked about. And again, not just the Fed funds rate, which is really little relevance to the long-term rate, which is really the big one, as I mentioned. Watching that money supply, the M2, is really the key. So Fed's still been pumping money into the system, and that probably really explains why the stock market has been so strong. not so much what the interest rates have been doing or what the Fed is saying or what Donald Trump is saying about the Fed. So keep in mind there are other forces and details here that you need to pay attention to, which are not really discussed that much. And of course, the premier book for abolishing the Federal Reserve is um, the Edward Griffin's classic, The Creature from Jekyll Island. It's been out for decades. You got to read it if you haven't. And At some point, the Fed will be abolished, but it's like anything else, takes time for things to change. But there's a lot of shenanigans at the Fed, as I mentioned, and there's better ways. Was it the story, if I recall correctly, the former president from the 19th century, um, um, one of the former presidents, I think it was Andrew Jackson, had abolished the national bank, and he didn't believe in a national bank and paid off all the debt, and we were free and clear for a number of years until we ran, of course, into the Civil War. So there's a basis for not having a national bank. And although everybody's out there jumping up and down that we need it, I don't necessarily agree. You won't read the book. So Grassley and Paul entered a bill to audit the Fed, which at the very least needs to be done. I don't know if you're out there paying much attention to the plunge protection team. This was initiated by Ronald Reagan back in 1988, following the crash of 1987. It's actually called the Working Group of Financial Markets. You probably know about it, but they're busy in the markets. And again, financial press doesn't talk much about the plunge protection team, or does it the Equity Stabilization Fund, which was created back in 1934 as part of the Gold Reserve Act. So a lot of playthings that the government has, and I hate to use the word, but manipulate the markets as need be. So this is part and parcel to the big background here, which I'm sort of addressing before we get into specific markets. So I published this VR forecaster report. You saw it on the homepage when we signed on earlier. It's one of our products. We sell it as our annual forecast report for the major markets. And this is what it looks like when you go on to the homepage. You can sign on for half off, 50% off if you're interested in getting it for the balance of this year or for 2026. And it puts out charts like the one we're showing here. This was the forecast for the Dow Industrials back in 2023 with the results. The yellow line is what actually happened, and the bars is what was projected. This was a 2024 projection for the Dow Industrial Average, which was again based on this VR forecaster report that I put out every year. And the bar lines that you see are the actual forecast, and the yellow is what actually did happen. And 2025, well, look, this is where we are, and it called for a pullback in the first quarter. It also, suggested that it could be a sell-off, and of course, we had the big April correction, and it nailed that pretty well, as you can see. Remember, this is put out in January, and it showed a little dip here in September, October. You can see that on the top right of your screen, and then strengthened to the end of the year, which is sort of my current thinking based on this model. So um, I originally created this in 1987. It called the crash back in 1987, and I got spoiled doing it. It's created using a bunch of cyclical and seasonal patterns and indicators, and it tends to work more than it doesn't. But like anything else, I sort of compare myself to the weatherman. The weatherman can make a forecast, look at all his charts, look at the radar, look at all kinds of other projections that are put together. But before you actually go on the air with your forecast, maybe you should look out the window and see what's actually happening. And that's where short-term indicators come in. So this is a bigger picture forecast, and you certainly, even though it does have some considerable reliability, you want to look at your short-term cycles. You want to look at your technical indicators, for example, my volume reversal and bar charts and so forth. But let's move on. So the forecast model for the US dollar, again, this was published at the beginning of the year, showed weakness during the year, which has been the case. Gold, this was the forecast that we put out at the beginning of the year for gold. And you can see here that it was, showing a potential pullback here in the September-October period, which I think is what we're now experiencing, but basically a bullish pattern for the year. Again, this was put out for and published, early in the year as we do every year for the forecast model. So he's looking at some stocks. Of course, one of the biggest names in the gold sector has been Agnico Eagle. Of course, this has been a leader for decades. But some of the big charts suggest that if gold does continue here in the years ahead, and who knows, it may get to five to $10,000 at some point with all the uncertainty in the world. This stock could be $300 to $500 a share, and it's now trading about 160. So we keep an eye on trading AEM, particularly on any pullbacks, and currently not in at this moment, looking for another entry point. But we're more traders than investors, but we still think this is a good long-term play. Newmont's been my favorite for decades. Why? Because it paid a nice dividend. You could have bought it, with almost a 4 5% dividend in recent months. Now it's much less than that, but it's one of the big name stocks that actually paid a nice in the gold sector that paid a nice dividend. This is a more speculative name that came across our desk. It's called North Isle Copper and Gold. It's a little dollar stock. It's already made a big move. It's up for about 10 or 20 cents, but it's an exploration company, and there's stories on the street that it might be acquired by one of the majors. So, we've had this on the list and keep an eye on this one as well. In the materials area, of course, the big the big dinosaur on the street here in the last few months has been MP Materials, particularly since the U.S. government is getting involved and trying to replicate the rare earth shortage that we have here that China pretty much controls. So the stock's trading in the 70s, but the charts say that might be $120 stock in coming weeks or months. So unless something changes with China and China opens up all its rare earths to the U.S. without restriction and we get comfortable with that, this could still be a play. This is my forecast model for silver 2025, and I was supposed to be covering all the markets here. And this was put out the beginning of the year, and again showed a choppy but a explosive pattern here toward the end of the year, which indeed has happened. One of the best plays it was a little ETF, Amplified Junior Silver Miners, ticker symbol SILJ. Been making new highs just about every few days here in recent months. So this is one to look at if we get a pullback here in silver, which should be happening here short term. And where is silver going? There's an old expression on the street, silver is the widow killer. What does that mean? Well, it bankrupts more people than it makes money over the decades. So it just happens it's in a big move now, but for so many years you couldn't make money with it. It would whipsaw you. It never really follows through. So everybody's hoping that it takes out the $50 high from the Hunt brothers scandal from decades ago. And maybe this time it's different and it will take out that 50 since it's so close and maybe even go a lot higher. So the trend's up. You can still see the trends up, but like anything else, I want to see what my 2026 forecast model looks like when we put that together next year. So I encourage you to sign up for that at the time. One of my favorites also is AG, which is First Majestic. The stock was in if I remember correctly, the high 20s or low 30s back in 2010-11 timeframe. So here in around $11, it's still relatively cheap. So another one to look at on a pullback. So what's crude oil doing? Well, in 2024, we put out our forecast model for crude oil, and the forecast was the bar lines again, and the actual result was the yellow in terms of tracking what actually did happen versus the forecast. 2025, what did our forecast say? Well, it said crude oil would come down. And in fact, we actually put out a recommendation projecting $55 a barrel for crude oil and maybe even seeing the high 40s in crude oil. And it could still possibly happen this year or early next year. And this is very bullish, folks, because as you know, crude oil is a tax on consumers. And if crude oil does indeed drop off here or continue, at least at depressed prices for a period of time, it's good for the economy. So anyway, things could change with a Mideast crisis or some geopolitical event overnight, that's for sure. But as you can see, our forecast said, watch out, it could be pulling back, and indeed it's been choppy with a downward bias. This is the vehicle we had used and would continue to use. It's SCO, which is the Bear Crude Oil ETF. This is the one we've been trading during the course of the year to play for the down move in crude. So yeah, this is basically tradable like any other ETF. We're not currently in it today because of the Rosh Hashanah Yom Kippur pattern that I mentioned at the top of the broadcast. We're pretty much on the sidelines here watching the markets, but this again would be a play that we would consider. This is a VR chart for the SCO. I just want to throw it up. This is what our typical VR chart looks like, with the little volume reversals in it. So we can get into this in some future presentation. Bitcoin, I know it's on everybody's discussion list here, and we've been very active with our blockchain letter. This is the forecast we put out for Bitcoin, of course, crypto entirely, not just Bitcoin, but this is our 2023 forecast for Bitcoin, with the bars indicating what the projection should be in the yellow line, with what actually did happen. So pretty much on target there. In 2024, we put out a Bitcoin projection. Again, the bar lines are the forecast for the year, and what actually happened is the little yellow line that you see at the on the top. So again, there was a nice tracking there as well. So what Bitcoin looked like in 2025? Well, beginning of the year, we put this out, and indeed, we did have a pullback in the first quarter, and pretty much showing an upward bias, so choppy into the end of the year, and again, a little sell-off in this current time frame. So um, not extraordinarily bullish, but it looks like it could trade higher into year end and maybe take out the 123,000 high and maybe even exceed that into the 130s or higher. We'll just have to track it day to day. It'd be real interesting what the 2026 forecast shows when we put it out. Um, Still a lot of interest in it, and we're sort of giving it the benefit of the doubt. At the moment, we are in it with our VR blockchain letter, and we are giving it the benefit of the doubt. Remember now, there's a lot of government support now for the cryptos with all the legislation that has now come through or pending, and the attempt to create a Bitcoin reserve here run by the U.S. government, and on and on and on. So, barring some scandal or some extraordinary event, Bitcoin should go higher in the months and years ahead. But we've already learned that Bitcoin could have very sharp corrections, very severe ones, in fact, if you've been tracking it for the last almost what now, 15 years or so. So you got to be aware of it and keep on top of the charts because at some point there could be a big shakeout as we've seen in the past. But short term, it appears at least into year end we're probably okay. So that's where we are on that. This is just an overall chart of Bitcoin using some resistance levels and support levels that I got from a friend of mine's website. But you can see here there's some channels here that say uh, if it exploded, you got some resistance in the mid to high 120s and maybe even into the high 130s or 140 levels if it really does wish to take off again. So by the same token, if it's under 108,000 or particularly under the 96,000 level, you've probably got some real problems ahead. So these are just good overall big picture guidelines to keep an eye on. So we just want to put that up for your edification here. So I want to mention XRP, which is another ETF. Another crypto, which, as you can see here on the charts, there's a lot of ETFs that are about to trade. These are apparently all in registration. XRP is considered by some as the leading crypto for commerce. According to this list, there's about 18 new ETFs coming. That should support some price action for XRP in the weeks and months ahead. I believe a lot of these may come into being in October, so I keep an eye on XRP. It's currently trading, I believe, around $2.80 to $3, very cheap when you consider, Bitcoin is trading at 115,000. So this could be a play, something to keep an eye on, and it's part of our ongoing list. And this is a little ETF that you might want to consider. There's a lot of others that I just showed you on the screen, about 18 or 20 coming, but XRPI is one. I believe that based on the futures market, not on the cash market, but trades about 18, $19 a share. So for those of you who are not interested in opening an account at Coinbase or Uphold or one of the crypto platforms and prefer to wait for an ETF, You could wait for some new ones or take a look at this one. So just want to mention that one is one you might want to look at. Another one to look at with regard to Bitcoin is BITO, which is the ProShares Bitcoin ETF. Now, they pay a large dividend, which is really interesting. So you don't get the price appreciation that you would on a pure Bitcoin ETF, but by the some of the dividends have been very generous. And if you've been in it for a while, your cost base in playing Bitcoin has been significantly reduced. So if Bitcoin, just continues to trade it as it has, and you own this, eventually you might have a zero cost in Bitcoin by virtue of the dividends that pays. Now, obviously, if Bitcoin has a big collapse or big washout, it will affect this as well. But just something to keep an eye on. It's a little more conservative way for playing Bitcoin. That's again BITO. Another big name has been Circle, which is in the stable coin aspect of the industry. Stock ran way up into the low 300s, is now trading around 125, 30 level. This is going to be very instrumental in the years ahead with regard to stable coins. We know what Walmart and some of the big retailers are doing in creating stable coins, and this is the facility and technology that it's based on, and Circle's involved in that. So I want to keep an eye on as well. It's been basing here, coming out of a little trading low, so it's been looking better and better. So another one that's on our watch list. So let's see here. This is a little visual on the BITO dividend payments. I just mentioned BITO a couple of slides back. So you can see here, uh, basically the monthly payments that have been made by BITO over the last year or year and a half. You can see, not too bad, dollar. Some months only 50 cents, but anywhere from a dollar to $1.20 a month. That certainly would be nice to reduce your cost in that stock. So I picked this up on the internet. Very interesting in terms of that information. Another name in the crypto area is CleanSpark, CLSK. So they're involved in the mining of Bitcoin. Stock had an explosion here in the last few days, got back to where it was earlier in the year. So if Bitcoin continues strong, this is a vehicle with regard to the Bitcoin mining business. Very volatile. It traded up to 15, down to about 7, now back up to around 14, 15 again. But it's a good trading vehicle, so one to keep an eye on, and we certainly do here at VR Trader. And if you want more information, again, I would encourage you to sign up for our email me with regard to the blockchain letter. In fact, um, I'm going to make an offer here, which I normally don't do, but if you email me at mark.vrtrader@gmail.com, I will send you a complimentary recent issue of the blockchain letter, which I think you might find of great interest. So mark.vrtrader@gmail, and we'll try to do that for you. And that pretty much winds us up here, Charlotte, for this Wednesday morning. Again, if you want to sign up for any of our letters, you can get half off by going to vrtrader.com. But like I said, on the blockchain letter, I'm happy to send you a complimentary issue. And I really appreciate all of you tuning in. And again, remember, we're still in this Rosh Hashanah Yom Kippur time frame, so you may not hear about it every moment or hear it at all on the major financial networks, but you're hearing it from Mark Leibovit at VR Trader. Thank you all for attending.
Thank you, Mark. Fantastic presentation. I know I'm not alone in that. I do see a couple audience members as well saying thank you for the great presentation. To those of you in our audience, thank you as well for joining us, and be sure to stay tuned as we do have more in store for you today in this Money Show Virtual Expo. Mark, one more time, thanks so much for coming in today. It's been a pleasure having you present.
Charlotte, you're a great host. Thank you, hostess. Thank you.
Well,
Love to be
thank
here.
you. Well, until next time, hopefully we'll have you on again soon. But to those watching live, I'll see you again at our next session. Take care. Have a great rest of your day.
Bye bye.